Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, August the 17th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. We are a private group of traders that operate a live trade room. We do these pre-market sessions each morning. You can go and check out my YouTube channel. There's over 500 days up on the YouTube. We do this session each morning. What we do is we take a look at the macro to micro, take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, I am offering free trials right now to the live room. We do these pre-market sessions, and then we do live trading and analysis during the course of the trading day. Send me an email at quantumleapfutures@gmail.com. There is no website. There's no blog. It's not a commercial venture. We do this as a way of giving back and to have a group of what we call a self-organized learning environment. You will need Skype, so you can send me a contact request directly on Skype. To Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And of course, if you're in here, you're already following me on Twitter. If you're not, please do. And please like my YouTube videos and my Twitter posts. So let's just get the disclaimer out of the way. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating with a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's start with yesterday and take a look at our trade levels. Our main hypothesis yesterday was a open auction just out of range, a move down into our key level at 66, possibly even down to the 64 and the 63.50 VPOC from the prior day, and then rotation back up and up towards that zipper measured move that we had at 74.75. Hypo 2 was a open test drive, failure to get inside of value and then move up into the 74.75 and go and challenge that 80.50. And then Hypo 3 was a failure to take out that zipper measured move, find responsive buyers, and then rotate down and come down into the 63.64 and go sideways. We kind of got combination of Hypo 2 and Hypo 3. But we basically came back inside and challenged the value area most of the afternoon. We did set up for that zipper measured move. Let me just get rid of this. Let me just expand this out. We had in the live room, we were talking about this zipper measured move right here that set up for a move down to the 58.50. This is not session related. This is a proprietary measurement that I do based on impulse wave of 5.25 points or greater into a zipper, and then the measured move of the 61.8 extension. And we didn't do it yesterday in the afternoon, but we did come down in the Globex session and hit the target, the measured move target to the tick, and now we've bounced back up and we're back above that key level at 24.60. But we'll get into that in just a few minutes. Let's take a look at the news today. We had the Philly Fed business conditions. We had the Philly Fed employment and new orders. We had jobless claims. Jobless claims was the big one. It came out slightly less than expected at 232 versus 240. So a fair amount of news, pretty mixed in general, but it did give us a lift based on the Philly Fed and the initial claims. At 9 o'clock, we've got, or 9:15, we've got the industrial production and the manufacturing production coming out. And then at 10:30, we've got natural gas. And then we've got Kaplan speaking at 1 o'clock. and Kashkari speaking a little bit later on. So not a lot of news. The big news will come next week. Taking a look at the, it is expiration. So right now our max pain is sitting at 247 on the SPY. What are we trading on the SPY right now? Sorry. Right now we're trading 246.45 on the SPY. So we're coming into expiration tomorrow, and currently right now the max pain between the calls and the puts is at 247, and we're trading just below it. Look for them to pin it here and watch how this shifts as they close things out. Each morning I like to start my day with a basic candlestick chart. I use my paper money, and it is live data though. I start with the monthly. I use a 9 EMA and a 20 SMA. I'm simply doing this to give me a sense of where we are in the trend on the different timelines, time frames, and I'm looking for slope and separation, where the trend is being challenged or violated. You can see the monthly is still one time framing up, and we've got good slope, good separation. Trend is very much on the week. It is strong on the monthly. On the weekly, we had that inside week 2 weeks ago. We talked about this. You can go back and check the videos. We were looking for a rotation down off of we call these inside bars Mr. Sneakies. They're not haramis because they're not body inside body, but we were looking for a pullback to close this small technical gap. But we came and we held the trend line on the daily, and so far we've bounced back up, and we're holding the trend. We've got good slope, good separation on the weekly. On the daily, a little bit of a different story. We broke down, we tested this long time frame trend line that we've been following, and then we bounced off of it, tried to get back above the 9 and the 20, but right now we're coming down and failing, and we're at a very key level, which is the 2460, and we'll take a look at that on the structure when we get into the profiling. And then going into the intraday, you can see that the 4-hour has broken down below the 9 and the 20, so we're getting a trend challenge violation on the intraday. As we move down, you can see that accelerates. We're now getting a downward trend on the 1 hour. We do have some naked crosses below us down at the 2450 area. That's also the mid of the gap. As I move down to the 30-minute, you can see we're below the 9 and the 20 there. The 15-minute accelerates, but we're trying to take it back right now. And then on the 5-minute, we are trying to violate the downward trend and possibly get a move back up. So if we look at it in the profiling, just a bit of narrative so we can bring context into this. We're in this long time frame balance area that goes from May the 25th through to the July breakout. We had a microcomposite VPOC price acceptance at 35.50. They break out of that finally. They accept value just above the value area at the 40.75, start the price discovery up, go up higher, accept price at 57.75. Then we come into this balance zone, and they try to hold balance up here at the 76.25. They can't. They come back down to the last accepted price, down at the 57.50. Find those buyers, come back up, balance out again in the 72 area, and then they push up, put in the blow off top, 88.50. Okay, come back, try to hold value, fall out of the balance. The value area low of this microcomposite is at 65. They come down. We talked about this, that they wouldn't likely find the buyers at 57.50. The next time they fell out of balance, they're more likely to come down towards that 40.75 or all the way back to the 35.50 area. They come right back into that area, accept value higher in the 39.50, and then we gap up. And then we talked about this on Monday. I posted it in Twitter. I posted it in the room. If we got back above that 65, look for them to come back up into balance at the 69 and challenge that month open. Our month open right now is 70.50. We came up to the 70.50. We went into the 72s. We could not hold the 72s. And now we've come back down, and we've come down and challenged the lower distribution and our key line in the sand, which is going to remain here at the 24.60. We've just dipped back down, made a Globex low at 58.50, and we're showing some weakness coming in to this market. And we've violated the one-time framing up on the daily pattern. So if we take a look at the overnight structure, you can see that we're about 80% net short in time and in price. We've got a double distribution being created. The VPOC is at that 64.50, and we've got an LVN at 62.75, and we're creating this lower distribution as we fight this key line in the sand, 60. So if we start moving over and start moving our numbers over onto our trade chart, our key line in the sand still is at 60.50. We've got an overnight low at 58.50, but we still have 35 minutes before the RTH session, so we could come down and expand the low. But for the time being, I'm going to put the low at the 58.50, and this is no longer going to be a real good target. Our high is 68.50, which is just sitting right on the midpoint and that prior range high and the VWAP from yesterday. The overnight VPOC is not likely going to change. It's at 64.50. And then we've got this LVN at 62.50, which is the range low from yesterday's RTH session. So 62.50 is going to be a trade level. Okay, above that, I'm targeting up into the 64 to 67 level. You can try to use the 65.50. Remember that is just 2 ticks above the microcomposite value area low of the balance that we fell out of last Thursday. So I am going to mark it on the chart, but I'm going to put it at 65. And looking, if I'm going to try to trade off of this, I got to be low. If I'm shorting, I got to be below 65. If I'm trying to add into a long or get long into that 67, and the naked close from yesterday at 67.75, I got to be above the value area low of 65.50. So a little bit of a slush zone there. And then this is going to be very choppy inside of here. You've got the overnight high, you've got the microcomposite VPOC, and you've got the month open. I always use the full session month opens. I don't use the RTH session. And then above that, you've got 71. So I'll be watching the 71s as well. And above that, I'm targeting the zipper measured move, okay, to the upside. We missed it by 3 ticks yesterday, but it's still valid until we get below that 51.75. So it remains valid right now. And then right now, our full session daily ATR is running at 1440. So off of the high overnight of 68.50, our daily downside ATR is running at 75.50. No, that's wrong. I have on the calculator. 68.50. Sorry, my calculator's sticking. 1440. So 54 is our daily downside ATR target now, right where that trade level was. So we'll just get rid of that and move that down to 54. And then our upside daily ATR target currently at 50 low. Our upside daily ATR is 73. So our average range, full session range right now is between 73 and 54. And we violated the one-time framing up We've challenged the key line in the sand. So what is my hypothesis or hypotheses? We do create multiple hypotheses in order to have a plan in place. We don't do this to try to hedge what we're saying. We do this because we don't know what the market's going to do. So we put a couple plans in place, and then we wait for the market to open up and tell us who's in control, and then we can exercise the plan that best suits the market. And so I have two main hypotheses, and then I have my alternative hypothesis based on breakout days. So right now, with the one-time framing being challenged and broken, my main hypothesis is for an open auction just outside of range or just inside a range, a rotation up, responsive buyers up into the 64 to 69 area, come up into this balance area, maybe even challenge the month open, but then I'm looking for sellers to step in and start rotating us down towards the 60 key line in the sand, chop between 60 and 63 area, and then push through, okay, and come down to what is going to be our main target below at the 57.50 at CHVN. And a takeout of the overnight low, and close somewhere down between the 57.50 and the 64, closing just below and coming down below the range from the prior day. That is hypo 1. Hypo 2 is an open auction out of range, a move down into the 57.50 area, possibly even to 54, create a basing pattern and start working our way back up and coming up and targeting inside of the prior day range and closing somewhere between 69 and 64. I'm not expecting a lot of range today. I still think we've got a lot of repair work to do in this area right here between the 57 and the 69.50 microcomposite VPOC. Hypo 3 has to be a gap rule day and possible gap and go. So hypo 3 is an open test drive or an open drive. Failure to get back inside of yesterday's value, push immediately down into the 57.50 area, chop in there between the 57.50 and the 54, and then fail and come down into that gap zone where our half gap fill is at the 50 1/4, and we've got that CHVN at the 49.75 and close somewhere down here in the gap. So that is hypo 3, and then hypo 4 is a open auction out of range, a immediate push up into the 69.70 area within the first 2 hours, base here, and then push up into that zipper measured move up at 74.75 and close somewhere in the upper distribution or just outside of yesterday's range high. So those are my 4 main hypotheses. Taking a quick look at gold. Gold made an interesting move yesterday. We talked about this in yesterday's pre-market session. We had the composite VPOC shift from the 1263.10 up into the 75. This move, this is the long-term price acceptance going all the way back to October 24th, 2008. And we had this this big move up, okay, of $41. And if you pull out your fibs, we retraced the fib right back to the 61.8%. That's right to the 72.70 fractal low that we put in there. Then we created this basing pattern, and we said this was looking for a basing pattern for a possible continuation wave. And then yesterday we had that push up, okay, and it looked like we were going to push up, in the Globex, okay, up into the 1300, or at least test this this fractal high up here at the 1298.10. We got as high as 96, and they've come back, and they're basing right around the 91. So for today, the key line in the sand is going to be 87.40 area. Expecting to accept this price back again at the 91 and continue this move up towards the 1300 and towards this target, our main target above, which is the 1302.20. If we fail to hold the 87, they haven't got the buying conviction. They're going to have to advertise for buyers. Look for the immediate target down below at 84.50, if not all the way back down into the 78, 79 area again. And I'm expecting the 75 to hold now, but we do have a $23 move up. But if we can base and accept this price, I'm looking for this to be the third wave of this continuation wave, this continuation pattern. And the fib extension up to 78 is 61.8, of course, and then look for that extension up into the 1300s to challenge it. So that's going to be our the end of our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Now, if you're interested in sticking around, I'm going to be closing this down so I can get the recording and put it up on the YouTube channel. But if you want to come into the room for the day, I am offering free access for today. Just send me an email, like I said, or a Skype contact request, and I'll make sure you get access to the room. I won't be posting it on Twitter because I'm only taking 25 people right now. Anyway, as always, trade well, trade safe, and we'll catch you on the flip side.